Good afternoon, everybody. Jim Barrett from RJO. It's Monday afternoon, the 14th. Notes and bonds lower today. The market had rallied strongly, obviously, late last week as the liquidity in high-grade bonds have sort of disappeared. There's a bit of a panic in the junk yields or the high-grade yields. Anyways, there was a flight to quality in notes and bonds, and that kind of did never last. Anyways, today it looks like we're out to stop out some late longs, people that lunged into the notes and bonds late last week. We're down pretty hard, down about 50 ticks in the bonds, down about 3/4 of a point in the 10-year notes. We just weren't ready to break out to the downside in yields or upside in notes and bonds. We're in a big trading range here. Of course, this week is a week a lot of people have been waiting for. It's the final Fed meeting of the year. Many market participants, most market participants feel the Fed has sort of painted themselves into the corner here. They got to make some kind of move off zero finally. Just because they've communicated, they're more likely to do that than not. And then one part of the mandate, of course, is unemployment, and that's low at multi-year lows. However, the other mandate is to keep inflation low to steady, and inflation, rather disinflation, seems to have raised its head, surprising probably all of them, how persistent it is. Most people about the collapse in energy prices, both nat gas and crude oil products, appears to be no low enough here, and that of course feeds into the panic in high grade bonds, because many of these bonds are oil companies that invested gazillions of dollars into wells that may no longer be profitable. Well, anyways, that mess is going to take time to sort out, and that's going to dampen any cycle of rising rates by the Fed. In fact, Yellen herself has said how subdued things are to be. That all adds up to the trading range between, say, 151.5 and 157.5 in the bonds, likely to hold. Those yields correspond to maybe 2.8, 2.85 to 3.1, 3.15. I mean, we're just locked in this range until possibly crude rallies sharply. I don't see that happening. I mean, eventually markets do always bottom. When that happens, if U.S. employment continues lower, then maybe the Fed will be able to follow up with another rate increase next year. A lot of the participants polled by a major financial paper, English paper, Financial Times, expect 3-4 different moves next year. Whereas the Wall Street Journal today, the U.S. Financial paper, obviously wonders whether the Fed will have to unwind, if they do raise rates Wednesday, unwind it sometime next year due to a panicky situation. I mean, it's just odd that given the fact there's really the lowest inflationary expectations going forward than there have been in roughly modern times, that the Fed is thinking about raising rates. Anyways, I can reach at 800-500-2461 to discuss any futures market. Please give me a ring. Thank you. Futures and options on futures may involve substantial risk and may not be suitable for all investors.